So today's topic is internal reconstruction. In Inter, very simple 15 mark sum we can expect from this chapter. So internal reconstruction, also called as capital reduction. So this chapter, very easy chapter. Transactions will be given. We have to pass journal entries. And we have to prepare the balance sheet new. That's it. Normally, when the internal reconstruction or capital reduction will be done means a loss-making company, generally, all the companies can do, but still loss-making company, they will do internal reconstruction, right? So, it is nothing but a regrouping or refreshing a balance sheet. Balance sheet la some fictitious assets and unamortized expenditure, goodwill, like that. There are some items, assets will be there. Fictitious assets means what? There is no actually asset, but still some debit balances are shown under assets side. So that and all we are going to close. And the liability also we will reduce by bargaining. We will call the creditors meeting, and the loss making company will say that, sir, company is under very big distress situation. So please reduce your liability. Like that, liability means what? The company is liable to pay 100 rupees to the creditor. So they will call the creditor, sir, we cannot pay 100 rupees. Like that, they will negotiate with the creditor. Creditor will accept some reduction. So when they will, why they are accepting the reduction? If they are not accepting the reduction in liability, the company will be closed down and they will not get anything. So business motive is what? A profit motive or maximum profit or minimum loss. So that is the profit motive, business motive. So sometimes creditors will also do reduction in their liability. So the main purpose of internal reconstruction is what? Refreshing the balance sheet. Balance sheet assets and liabilities will be there, right? So refreshing the balance sheet, that is reducing unnecessary assets and reducing the liabilities by calling the creditors and the shareholders meeting. Sometimes the shareholders also, they will reduce their claim. So they are having face value 10 rupees. Upon the face value, sometimes it will be reduced to 10 rupees to 5 rupees, 8 rupees, like that they will reduce. So the process of internal reconstruction is this. Actually, what is the steps in internal reconstruction? Means first, write off all fictitious assets, including goodwill. Goodwill, if it is there in the balance sheet, what is meant by goodwill? Trademark, similar to that, goodwill is there. Brand name. Actually, a trademark, brand name, goodwill is technically different, but still, goodwill is nothing but a good name of a firm. Normally, this goodwill, how we will recognize in the balance sheet means, in accounting for amalgamation, we will discuss in detail. That is, excess purchase consideration paid is called goodwill, right? Excess purchase consideration paid is called goodwill. So now in detail, goodwill is not required for you. So just understand, if goodwill is there in the balance sheet, that we have to write off. Any other fictitious assets? Fictitious assets means what? Actually, there is no asset. For example, unamortized portion or unamortized expenses. Normally, it will not be there. If it is there, we have to write off. For example, preliminary expenses incurred is written off over 5 years. Like that, a company is having accounting policy. What we will do? First, preliminary expenses means what? Expenses incurred for incorporating a company. So, first expenses we will incur, expenses account debit to cash. Example, 100 rupees. First you will incur. If it is a normal expenses, we will transfer to P&L. So P&L account data are to expenses. Like that, we will transfer 100. If it is preliminary expenses, what I will do? This 100 will be written off over 5 years. So every year, 20 rupees, I will transfer to profit and loss account for 5 years. Upon the balance portion, in preliminary expenses account will be 80 rupees. And 100 rupees incurred, 20 rupees transferred to profit and loss account. Balance 80 rupees will be there. In second year, 60 rupees is transferred. So, sorry, 40 rupees is transferred to profit and loss account. So, balance portion of preliminary expenses will be 60. Like that, it will be transferred to P&L over a period of time. At the end of 5th year, the preliminary expenses account will be having nil balance. So now in every year till 4th year, we are having some balance in preliminary expenses. That balance is called as unamortized portion of expenses. So if it is there in the balance sheet, where we have to disclose in asset side, because this is having debit balance. So this will be shown under the asset side. So this will be called as fictitious assets. Actually, there is no asset, but still it is a debit balance. So we are showing in the balance sheet asset side. Like that, there are some assets, including goodwill. Goodwill is also what? We cannot see some assets. So if there are fictitious assets and goodwill, first we have to write off. First step of internal reconstruction. Then second step, revalue all assets and liabilities. First, what we have to do? Assets we have to write off. Write off means what? Cancel, remove. How to remove? Goodwill or fictitious assets will be having debit balance. That debit balance we have to close. Means what? We have to credit. So the journal entry will be fictitious assets account data. Or, oh, sorry. Already it is having a debit balance, correct? Assets will have debit balance. To close that, we have to credit by opening internal reconstruction account. We have to open internal reconstruction account. So internal reconstruction account debit to fictitious assets, right? So fictitious assets example, I told this preliminary expenses written off, or sometimes a profit and loss account debit balance. That is accumulated losses in profit and loss account. Normally profit and loss account credit balance will be there, because in credit side only share capital, next item reserves and surplus. So reserves and surplus includes profit and loss account, which is a accumulated profit. So profit will be having credit balance. If loss making company continuously they are making losses, now accumulated losses will be there in the profit and loss account. So accumulated profit na credit balance, accumulated losses na debit balance. So that also we have to close. So fictitious assets include preliminary expenses and P&L debit balance. So we have to credit that. So profit and loss account, accumulated losses, goodwill, fictitious assets. These and all we have to cancel by creating internal reconstruction account. So first step. Second step, revalue all assets and liabilities. Liabilities and assets will be overstated or understated in the balance sheet. The correct value will be different. So we have to remeasure that. So this will happen in 4 ways. Assets revalued upwards. Assets revalued downwards. Then liability revalued upwards. Liability revalued downwards. So like that, different ways la revaluation may happen. For example, land and building revalued upwards. Actual book value is 100, but present market value is 200 rupees. Up 100 rupees, I have to increase. Assets will be having debit balance. To increase the asset, we have to debit again by creating internal reconstruction. Like that, assets revalued downwards, which is nothing but similar to cancellation of assets. So what I have to do? I have to credit the assets by creating internal reconstruction account. Like that, liability is revalued upwards. Liability will be having credit balance. To increase the liability, we have to credit again by creating internal reconstruction account. Then liability revalued downwards. We have to reduce the liability. Liability will be having debit credit balance. To reduce the liability, we have to debit the liability by creating internal reconstruction account. So first step, you have to remove fictitious assets, including goodwill and accumulated losses in profit and loss account. Then you have to revalue all the assets and liabilities. Third, pay off internal reconstruction expenses and any other liabilities. So pay off internal reconstruction. For doing internal reconstruction, you have to incur some expenses. We have to call creditors meeting, shareholders meeting, like that we have to call meeting. For that, some expenses we will incur. So that and all called as internal reconstruction expenses and any other liabilities, unrecorded liabilities. These liabilities we can classify into recorded, unrecorded. So first, two items is there. Pay off internal reconstruction expenses and other liabilities. First, internal reconstruction expenses we have to pay. What I will do. Internal reconstruction, I will debit to cash. I am paying cash outflow will be there. To reduce the cash, we have to credit. So internal reconstruction account debit to cash. This entry will be for internal reconstruction expenses. Then any other liabilities you have to pay. The liabilities we can classify into recorded liability. Means what? Balance sheet exists. In balance sheet, the liability exists. That liability we are paying off. In that situation, the liability will be having some balance in balance sheet that we have to cancel. So liability account data or book value to cash. Difference will be transferred to internal reconstruction account. The actual settlement. So the recorded liabilities, balance sheet, some value exists. That liability we are paying means the book value we have to debit, actual settlement will be credit, the balancing figure will be transferred to internal reconstruction account. Like that, some unrecorded liabilities are paid. Means what? Balance sheet no value. That is means unrecorded liability. Correct? Recorded na balance sheet some value is there. Unrecorded na balance sheet there is no value. In this situation, the liability will not have any book value, so I cannot debit liability. So internal reconstruction account debit to cash. This will be the end. So I'm repeating again. First step, you are cancelling the goodwill, fictitious assets and accumulated losses that you are cancelling. First step. Second step, you are revaluing all the assets and liabilities that will be given in the question itself. Land and building revalued upwards. Plant and machinery revalued downwards. Like that, question itself will say what we have to do. Accordingly, we have to pass the entries out of this four. Then third step, we have to pay internal reconstruction expenses, any other liabilities we have to pay. So internal reconstruction expenses, if you are paying internal reconstruction debit to cash. If you are paying any other liability, that liability I can classify into two, recorded, unrecorded. Recorded na balance sheet la value is there for liability. So that liability will be having credit balance. To cancel that we have to debit and we are paying cash So to cash, right? So the liability debit by book value and cash actual settlement, the difference will go to internal reconstruction account. Then unrecorded liability, if you are paying now, liability account we cannot debit because it is not existing in the balance sheet. Instead, we will debit internal reconstruction to cash. Then sometimes what we will do now, the liabilities we will convert into equity. For example, equity share capital issued to creditors or debentures are converted into equity shares, like that. But this is also what? Paying of liabilities, not by paying cash, by paying my equity shares. So up here, the liability will be debited. Instead of to cash, we will write to equity share capital. Right? Because instead of paying cash to creditors, we are issuing equity shares. So liabilities accounted are to equity shares, share capital. If you are issuing at a premium, to securities premium will also come. So liability account debit will be by book value. This will be the face value, securities premium, balancing figure. That is issue price minus face value. Sometimes what will happen? For 100 liabilities, we will issue only 90 rupees equity shares. Upper balance 10 rupees is your reduction. So balancing figure will be transferred to internal reconstruction account. Like that here, debentures are converted into equity share capital. Here also debenture is a liability. We have to cancel debit. To equity share capital we are issuing. If you are issuing at a securities premium, that will also come. Balancing figure will be transferred to internal reconstruction. Okay. Then fourth point is what? So first step, we have written off all the unnecessary assets. Second step, we have revalued. Third step, any other expenses and liabilities we have settled. Fourth step, prepare internal reconstruction ledger and balancing figure transfer to capital reserve. So internal reconstruction account we have to prepare. What will be the account format? Oh, okay, sorry. One more point is there. Record the sacrifice made by creditors and shareholders. I already told that reducing the assets and reducing the liability. So liabilities we have reduced by paying cash or by issuing equity shares. Correct? And here also liabilities we have revalued upwards or downwards. Then we have to call creditors meeting and we have to ask creditors to reduce their liabilities. So sometimes what will happen? The creditors will reduce their portion. So liability account debit to internal reconstruction account. To the extent of reduction. For example, creditors 100 waived 30%. Creditors worth 100 waived means what? Cancelled. 30% they have cancelled. Upper creditors account data to internal reconstruction 30 rupees. We have to transfer. Like that, shareholders also they will reduce some portion that we will discuss separately. So sacrifice by shareholder, separate discussion. Then fifth point will be prepare internal reconstruction account and balancing figure transfer to capital reserve. So if you prepare internal reconstruction account, how the ledger account will come? First, two liabilities, which is nothing but this entry. Internal reconstruction account data are two liabilities. Correct? So up internal reconstruction la first debit side two liabilities will come, which is nothing but liabilities revalued downwards. Like that, by liabilities will come if you are revaluing the liability by upwards. Then by assets. By assets, assets revalued upwards. To assets, assets revalued downwards. Then all the fictitious assets and goodwill I am writing off. So internal reconstruction account data are 2 fictitious assets, 2 goodwill, 2 P&L. Then I am paying cash for internal reconstruction expenses. And this difference, book value and actual settlement, that difference will also come here as by liabilities. Then we have to record the sacrifice made by the creditors. Then the balancing figure will be transferred to capital reserve. So ledger account will be closed. Then sixth step, prepare revised balance sheet. Revised balance sheet you have to prepare. In that, very, very careful, balance sheet of X Limited. Within bracket, you have to write and reduced. Like that, you have to write. So balance sheet of that company and reduced. Like that, you have to write. So the total steps in internal reconstruction is 6 steps. First, you have to write off unnecessary assets, fictitious assets you have to write off. Second, you have to revalue all assets and liabilities. Third, pay off internal reconstruction expenses. Then record sacrifice made by creditors and shareholders. Then prepare internal reconstruction account and balancing figure transfer to capital reserve. Last step, prepare revised balance sheet. In that, you have to add and reduced. First time, when you are seeing this much entries we have to pass are like that, you will think. But if you see the question, each and everything, transaction will be given. You have to read the transaction, pass the journal entry. So you need not to think much in this chapter. So very, very simple chapter is internal reconstruction. This is the concept. Some we will discuss later.